I think the Chinese have lots of tools. They have lots of weapons, probably more than we do, because they're essentially a command economy. We don't have that many. And let's face it, as soon as shareholders start getting hurt, and I mean really hurt, and it looks like they're going to get hurt a little bit this morning, then they'll start talking to their politicians.
But thus far, though, clearly that hasn't happened on the US side. GDP has been strong, and it likely will remain pretty strong until the midterm. So that's not going to really hit the president for the next round of elections.
Well, farmers are already up in arms, as you might expect. We export 6 times more soybeans to China than we do to the Eurozone. Now, Trump says that the Eurozone is going to start eating more soybeans, more tofu. Well, the French would have to eat tofu morning, noon, and night for them to use enough soybeans to matter. I don't think any of this is really news. I think that the reason the stock market's down so much right now, this morning, has to do with interest rates, the yield curve. Everybody's terrified that this is going to lead to a yield curve inversion. And I think everybody wants to be out first.
And do you think these tariffs will pressure the Fed more because it can push up inflation?
Anything that injects uncertainty into the situation is going to worry the Fed. That said, I think they're on autopilot to the end of the year.
Scott, I'm a little confused by what the right trade is here on trade. I went back and I documented that so many of the 1% or more declines we've had this year have been on trade news. At the same time, it seems to come back, and the market's ability to ignore the bad trade news, I think the effect is mostly in the counterfactual, as in the market probably would have been higher. There have been some studies that maybe as much as 70 or 80 points on the S&P have been foregone, if that's a word, foregone because of all the trade stuff. How would you do this? Would you be buying into this weakness here, or would you just get on the sidelines?
I would be doing one of two things. I would either buy weakness, like you're getting a chance to do now. I would stay away from name, and I love John Deere, Deere & Company. It's a great company, but listen, it and Boeing and a few other names are going to be at ground zero of this battle.
But doesn't the market know that? I mean, every time there's something that gets ratcheted up, those are the stocks that take a direct hit.
Until the president comes out and says, we're going to give American farmers $12 billion, which farmers don't really want. They just want fair trade. Listen, the most entrepreneurial people in the United States of America are American farmers, and they just want to compete.
So, Scott, take a look at our results of our Fed survey. We asked people who wins a trade war. And the results are that America overwhelmingly will be the winner. Now, I don't know. It reminds me of the old love and death. Well, what do they win at the end of a war? But the idea here is that the 42 respondents to this survey think that if we go toe-to-toe with Canada, toe-to-toe with China, and toe-to-toe with the EU, America has the means to emerge as the winner.
Well, listen, us going to war with Canada doesn't make a whole lot of sense.
Well, there was a movie about it. Canadian Bacon.
I'm not going to base my investment thesis on a movie. I do think, and I've heard you say this morning that describe the situation with China. I don't think the situation with China is fair. They are horrible when it comes to intellectual property protection. They're terrible about it. And this is part of what needs to be fixed. You can say what you want to about free trade. It does great things for us if we can have them build all of our iPhones. But to the degree that they then steal all the technology that goes into the iPhone, it's horrible for us.
Let me